Hello there, it's a conversation on the illegal acquisition of funds, the transfer of it, and also the illegal use of it. And that's the conversation we're having here as part of the 2025 edition of the OXFAM Tax Dialogue here on 97.3 CTFM as well as ChannelOne TV. The conversation is on illicit financial flows, and last week we brought you the first episode of it. Today we are continuing, and this is part 2 of the conversation. I am Nila Tilase. Thank you so much for joining us this time around. We're taking a short break. When we come back, I'll introduce my guest and also have the conversation in proper context. Don't go away. Welcome and thank you for staying with us here on the OXFAM Tax Dialogue here on 97.3 CTFM and ChannelOne TV. My name is Ni Latte. In our previous episode, if you remember what we discussed, we were talking about illicit financial flows. We spoke about the 3 legs of it and how it affects national development, revenue generation, and what have you. The conversation was interesting. A lot of comments came in, and today we've decided to continue and have a different leg of it. And so if you care to know who my guests are, we have Seth Nana Amwakon, who is head of analysis at the Financial Intelligence Center. We also have Daniel Noah, acting director, revenue policy division of the Ministry of Finance, as well as Maxwell Curry, a policy analyst at Global Financial Integrity. Today we have 3 guests. In the previous episode, we had 2 guests. Today, we have 3 guests. We tell you that the conversation is getting more interesting and more packed. And so they are here to really help us understand what it takes when it comes to illicit financial flows. So last week, we had the basic understanding of it. We also had the forms and shape it takes, how it affects revenue generation, and even the provision of, social and developmental infrastructure. You were here with us last week. And so I just want to move to Maxwell, who is new with us here in terms of this conversation, and I'll come to Mr. Noe as well. Just your first thought when it comes to illicit financial flows, just a recap of it. I know we heard from Seth last time. We just want to hear from you, and then we'll look at the different legs of the conversation as well.
Thank you so much. As you rightly put it, illicit financial flows is something which has been a scar and then is ravaging developmental efforts across the world. And then it stands to reason that monies that comes from illegal source, okay, that is maybe from drugs, from theft, corruption, money laundering, and it in a way impacts the amount of money that is raised for development purposes. So for me, it stands to say that it's something which we need to really put our efforts together and then try to stem it and at least generate enough revenue to be able to put it together and develop Ghana.
I see. So back to you, Mr. Noe. I want to know how the issue of aggressive tax planning, the effect it has when it comes to illicit financial flow. Is it a determinant or a resultant effect?
Right. Maybe before I dive right into that, I would like to talk a little bit about tax and illicit financial flows, if I may.
You have the floor.
In the sense that generally, any tax abuse program that affects the tax system has that effect when it comes from illicit financial flows. So it could be a transfer pricing issue, it could be a trade misinvoicing issue, and all the other evasion and avoidance issues in terms of tax, which deprive the government of the resources that they need to put to developmental use or to provide public goods for that matter. And so when you're talking about aggressive tax planning, the issue that tax planning generally is said to be acceptable. Tax planning is differentiated from tax avoidance and tax evasion. Tax and quick one, tax avoidance is where I take advantage of loopholes in the law to avoid paying tax. Tax evasion is when I'm supposed to pay a tax and I refuse to pay it using several means. Tax planning is where I take advantage of the tax system to do what. So for example, let me give you a example. I'm supposed to pay a tax by the 15th of the month. Otherwise, I pay a penalty. So I plan my actions like that by 14th of the month or by 15th, I've paid it so that I do not have to pay a penalty. That is part of my tax planning activities. If I was doing it in terms of tax avoidance, and is the avoidance and evasion, which is the aggressive part of tax planning, is where I know that I have to pay on the 15th. Then there's a loophole in the law that allows me that I can say that, okay, yes, I can pay, but then I come and tell the authorities that something has happened, and so I cannot pay on the 15th. I cannot pay on the 15th. And therefore, they allow me not to pay on the 15th based on the reason. The reason might be very wrong. It might not be genuine. So when I use the ungenuine ones, then I'm doing something which is more aggressive, which I'm trying to avoid paying the tax on time. This time is on time, not paying it at all, but paying it on time. So there are various schemes. So the aggressive tax planning really is the one that is negative and has a negative effect on both tax and government. The other one, as I said, tax planning generally is to help you to arrange your matter so that you pay the right amount of tax and the right time and no more and no less. So generally, that's the way I'll look at it.
I see. So this tax abuse you talk about, is it commercial tax abuse or any other form of tax abuse?
Okay. So when you're looking at the categorization of tax, illicit financial flows, most of the time, the tax one falls under commercial tax abuse, where is and because of the fact that it involves revenue. So if I'm mispricing, then I'm using either a lower price or a higher price to take advantage of the tax system to enable me to pay less tax. So it's more of the commercial one, so it involves, yes, generally revenue. Let me put it that way.
All right, thank you very much, Mr. Noah, for your preliminary talk on this particular subject matter. And so Seth from the Financial Intelligence Center, your opening remarks.
All right, thank you very much. Maybe just to touch on what Mr. Noah said, or to add on, in terms of other factors that may contribute to that, you're also looking at the fact that tax haven jurisdictions can also be used as a way of moving maybe profit from here to this tax haven jurisdictions. And that may also affect our domestic maybe tax compliance. Maybe another area, the fact that we have a lot of informal sector players, you know, it's also a contributing factor. So, and maybe the last one from my side will be, you know, we have tax incentives and it may also be abused as well. So there's the need for us to ensure compliance or enforcement or regulation when it comes to
but these tax haven jurisdictions that you talk about, is it what gives rise to what has become known in the sector as a basic erosion and profit shifting? Is that the situation?
It may be one of the legs or one of the factors, but of course there will be other areas that may also be exploited
we'll go into
as well.
proper details when it comes to BIFs and what have you, but the integrity man is here. And so this abuse that we talk about, I just want us to have the aspect of transparency, the issue of compliance, the issue of flexibility. So three key issues here. Do we have transparency in our tax regime in the country? Is the processes, or are the processes flexible enough? And also, is there an issue of compliance or non-compliance, for which reason we are dealing with illicit financial flows in various sectors like we discussed the other time? We have mining, we have real estate, and what have you. I don't know what you make of this particular subject matter.
Okay, talking of just a little bit on what Seth mentioned about offshore jurisdictions. For instance, there is a...
So offshore jurisdiction is the same as tax haven jurisdiction?
Yeah, you can say so. But in terms of maybe let me just go straight to the question about flexibility, transparency. For instance, in Ghana, information is key to fighting illicit financial flows. And one sector which I think is a little bit problematic for us, and then for said organization to be able to adequately work and fight illicit financial flows, has to do with DNFB fees, where suspicious transaction report.
If you use the technical terms here, my listeners and viewers will not understand. So please break it down for us.
Designated non-financial businesses and professions.
Designated
Non-financial businesses and professions, like the lawyers, accountants, real estate agents, and brokers.
I see.
Yeah, I think I've mentioned
so
the lawyers.
they are required to give information to suspicious transactions, okay? But we have a situation whereby we have a cash-based system, which is a problem. So for instance, I can go and buy a house with cash. It becomes very difficult for traceability purposes. It doesn't leave any trail. That is one aspect of it. Then the second aspect, which he also mentioned, is the informality. Basically, once we have a large informal systems and then transactions doesn't go through banking, it is that limiting for sets in organization to be able to use to fight. So when we talk about transparency purposes, that's where we have to start maybe training and then do a lot of public awareness so that people will get to understand the negative aspects of lack of transparency in tax dealing and exchange of information, so that we will be able to have a better understanding of the requirement to properly pay our taxes in Ghana. Yeah.
I see. So let me yield to Mr. Noah. What do you see when it comes to the challenges, the biggest challenges in dealing with illicit financial flows in developing countries such as Ghana? Because it appears this particular subject matter is one that is dear to all of you. I see the passion with which you speak about when it comes to illicit financial flows. But you sit at the Ministry of Finance. You are the acting director in charge of revenue. And from the picture you see over the years, what is making us lag behind when it comes to tackling this once and for all?
Well, talking about the challenges, I won't talk about lagging behind, but I'll say challenges in the sense that we've put in quite a number of systems to do, which I'll talk about later. But one of the things, as has just been mentioned, is the exchange of information amongst government agencies where we sit in silos. So it's one of the things we've recognized. So if you pick the medium-term revenue strategy of the Ministry of Finance, you realize that there is a portion of it where we talk about a whole of government approach.
Exactly. I just want to read that bit to you. So from the medium-term revenue strategy, the Ministry of Finance says that it is proposing a whole of government approach to tackling illicit financial flows. And in there, you are trying to develop that approach in tackling it. So, for example, if you say a whole government approach, what do you mean? Is it cutting off those silos you talk about in the government agencies?
Yes, so generally, we've actually started working on something. So as part of implementing the recommendations of the Mbeki panel, you realize that when it comes to anti-money laundering and some of those things that relate to illicit finance, there are already committees that are there working on these things. We don't always come out in public, so a lot of people don't know, but there are a lot of these things that are being done. So it's to deepen that relationship and make it even more robust in terms of that. So, for example, we put together another committee for the validation. You know, as part of the Mbeki panel, there were some recommendations made. So we're actually working on what we've done under the recommendations. There's a committee coming out where we'll launch the validation project to show what we've done and the additional factors. So that part of the strategy is to deepen that and make sure that we have that exchange of information internally, which is important. Because once we work together, and because he talked about the informal systems, then we're able to tackle some of these informal systems because we all have information sitting around, which when we put it together, helps us to tackle IFFs. So tax-related IFFs. I mean, as I said, I'll talk more about tax-related IFFs, but then generally, that's the idea.
If you are listening to us on radio, this is the City Business Edition on 97.3 City FM on TV. This is ChannelOne TV. You are listening and watching the 2025 edition of the OXFAM Tax Dialogue. This is our 4th episode, and we are delving into illicit financial flows. I have 3 guests with me. Stay with us. We are taking a quick break. When we come back, we have more in store for you. Welcome back to the OXFAM Tax Dialogues on illicit financial flows. My guest today, Seth Nanamwako, Head of Analysis at the Financial Intelligence Center, Daniel Noe, Acting Director, Revenue Policy Division of the Ministry of Finance, as well as Maxwell Kure, a Policy Analyst at Global Financial Integrity. So far, we have been looking at commercial tax abuse, aggressive tax planning, the biggest challenges in enforcing anti-illicit financial flows, revenue measures, and all those issues. But now I want us to do a bit of comparative analysis. What are some of the international best practices, structures in place that a lot of organizations have outlined to help us deal with some of these issues that we are talking about? And how has Ghana so far taken advantage of some of these structures to better our game when it comes to illicit financial flows? Mr. Noel, should I begin with you? Okay.
So generally, there is some international standards that have been put in. And there's a current one actually being at the UN, which is looking at international tax cooperation. And one of the items it looks like is tackling these financial flows. The other one, which a lot of us are aware of, is the OECD Inclusive Framework and the BEPS issues. Ghana is not a member of the Inclusive Framework, but then the items that have been taken in terms of tackling transfer pricing, harmful tax practices, and all the other things that are there are things that Ghana has taken advantage of. And we have some of them in our laws already, the others that we are putting in laws. There was an issue of tax havens. What we've done with our domestic law is that we have what we call the limitation of benefits, where if you're in a treaty country and you just go to that country because you want to take advantage of the treaty, your benefits are limited. You cannot take advantage. There must be some precedent. You must be doing something in order to take advantage of the treaty with either of the parties. And it's in our domestic law to that effect. So that if there's a treaty and even if you do that, you don't get advantage. We've done something on tax incentives, where if you enjoy an incentive, and then, for example, we have a tax holiday for 5 years, and the 5-year ends, you cannot just close down and then come up with a new company. Because our law says that once there's even one person associated, not necessarily even a member associated with that company, you don't get the incentives again. And there are a number of general anti-avoidance clauses in our laws that help us to tackle these things as we go along.
All right. Just to also touch on maybe the grey listing aspect, the effect of that when a country is grey listed.
So this grey listing you are talking about came up in the previous episode, where the European Union will have to blacklist some countries, yes, or even grey list them, which Ghana
was added
was
to
a victim.
This list. Exactly. So
just to get it clear, it's also one of the international structures
certainly
that is helping us fix illicit financial flows.
Yes, not only illicit financial flows, but the whole AML, anti-money laundering, combating the financing of terrorism framework.
Maybe help us and educate us here. What's the difference?
Okay, so anti-money laundering basically measures that you have in place to combat money laundering. And last time we met, I told you about some of the illegal sources that can get money to wash or launder to make it look clean. We also said that when it comes to illicit financial flows, money laundering is one of the pillars. So the whole framework is to help us to put in place controls, whether for money laundering measures or illicit financial flows. Now, when you don't do well in terms of assessment, then your country will be grey listed or blacklisted. Grey listed meaning you'll be given a set of actionable items that you need to address. And if you're able to implement them, you'll be taken off the grey list. Blacklisting meaning you are not ready to cooperate. And Ghana, we've been doing well in terms of addressing our deficiencies. So usually we say that the country is having AML, that's anti-money laundering, combating the financing of terrorism, strategic deficiencies. So if you're able to address them, then you'll be taken off the grey list.
So these controls that we talk about and inefficiencies or deficiencies, specifically, what is the EU looking at?
So we're talking about international standards, which all countries are using.
What are the benchmarks?
So the benchmark, we're talking about supervision. And supervision, we're talking about the financial sector and also the DNBPs that Maxwell mentioned. So we want to know how regulators, Bank of Ghana, SEC, NIC, MPRA, Gaming Commission, Minerals Commission, all the key sector players are supervising their licensing institutions using the international standards. How we, even the general public, we understand anti-money laundering measures and even reporting suspicious transactions to a designated office, in this case, FIC.
And so usually, how is this done? Is it that the EU comes here to come and look at our books? Usually, how does it happen?
So Ghana belongs to a regional body called GIABA. It's called Intergovernmental Action Group Against Money Laundering West Africa, based in Senegal.
I see.
So GIABA is a regional body also to FATF, Financial Action Task Force. And we are all using the international standards called FATF standards or methodology. So our regional body will come to Ghana, like ECOWAS body, with experts who will come and based on parameters or using the international standards, we go through our books, if I should use your words, to see whether we are complying with the international standards. And some will touch on supervision, some will touch on even licensing, or even the beneficial ownership concepts, how we know those who are ultimate beneficiaries of entities. So we have different, parameters that we use called immediate outcomes. There are about 11. Transparency is one of them. Reporting of suspicious transactions, which will be more like preventive measures. Understanding of money laundering concepts, even dealing with terrorism financing investigations, a whole lot. So when you are being assessed, these will be some of the areas that you need to make sure that you comply. And if you don't comply, then of course you'll be grey-listed or blacklisted.
And I'm sure if you are grey-listed or even blacklisted, it will have an impact on fiscal policy.
Certainly. Certainly. So when you are grey-listed, reputational issues. So for example, maybe international partners will not be ready to come and do business with you, which may also affect our financial stability to some extent. Also, when you are grey-listed, you're talking about the fact that when you're engaging in international transactions, there will be some delays or even enhanced due diligence to be conducted on you, all because your country is not in a good shape because you are not complying with the international standards. There are a number of issues when it comes to being on the grey list and also when you are being blacklisted. Corresponding banking relationships will also be affected as well. The whole financial stability will also have some impact.
It's a gloomy picture you paint. And so at the time that Ghana was grey-listed, it had effects when it comes to all the things that you've mentioned.
Maybe some of them.
No, but it will not take all the boxes.
Yes, maybe some of them. But I'm just giving you the general overview of when you're on the grey list. But by all means, as we deal with other international banks, and you are grey-listed or blacklisted, in our case, maybe grey-listed, the partner overseas will want to do more work on the local bank here, and that also delay transactions, which may also not be good in terms of a business relationship.
Global financial integrity. I'm sure this should be a matter of concern to you. Grey listing, basic erosion and profit shifting, and all its attendant challenges. I didn't know that this was the challenge a country will go through if that country is blacklisted or grey listed. It has a lot of reputational, effect. But we are wrapping up in just 5 minutes. Let me have your concluding remarks when it comes to the way forward in dealing with the issue we talk of now. There are some proposals you want to share with us, recommendations, or some works you've done in the past. I'm sure you would have.
Okay. Seth already mentioned one of the key ones, which is beneficial ownership transparency. And it just basically talks about the fact that every existing company should have at least a natural person who benefits or have substantial control over that particular company. So the second proposal, which I think I will mention, is the issue of blockchain technology in our ports, which is basically to facilitate the exchange of invoice validation data or valuation data, where maybe if I'm bringing in a car or a mattress or a TV from a particular country, there will be that exchange of information through the blockchain in such a way that when it gets to our customs, they will be able to tell that this particular item costs this amount of money and be able to apportion the relevant or the right amount of tax such that the importer pays. One of the
So simply, just to bring to an end the issue of misinvoicing and invoicing.
Yes,
okay.
Yes, to basically eliminate that, and it will go a long way to raise revenue for Ghana. The second issue has to do with trade involves commercial shipping, and it's one of the points where we will need to have a global commercial shipping BO registry, where we will be able to eliminate those that are used for nefarious activities, the trade in narcotics and then counterfeit goods, for instance. And once they sail closer to your country, you'll be able to determine, or when you see numbers, you'll be able to determine whether this particular or that particular ship is properly registered to be able to do business in your country. In a way, reduces the risks associated with like international trade when we have commercial shipping BO in the world.
Yeah. I see a lot of things happening at the ports, right? When it comes to illicit finance, so a lot of shipping issues over there. But Mr. Noe, what are the next steps from here, from the ministry's perspective?
Generally, it's more exchange of information.
You are more concerned about the exchange of information,
because,
right?
I mean, where there's light, the darkness cannot exist. So once the information is out there, it enables you to tackle all these issues. If I'm going to tackle mispricing, I need to exchange information. So there's the safe framework under customs, which we are working on getting more, dealing with more countries to have that exchange of information with them. On the customs side, we have exchange information. On the income tax side, currently receive what we call banking information on individuals. And so we are telling people that come and file your returns. Otherwise, if you don't file those returns, GR will come after you, assess you, and charge you penalties. So all this, once the information is there, it allows you to be able to do the follow-ups and then plug the holes. So our whole of government approach is one of our main targets. Put that one in place, and it resolves a lot of the problems that we have.
Mr. Noah giving us some biblical quotes there. What's your final conclusion?
Sure, mine, basically to enhance interagency cooperation. You know, we need to work together. So my unit working with all the stakeholders in Ghana, so then we can exchange intelligence as well and see those who are, in the case of what we are discussing, those who are tax non-compliant, we'll be able to also monitor their transactions and, if possible, charge them for the offense of money laundering or any of the predicate offenses. The other one I also want to touch on is the fact that we need to also make sure we prepare well in terms of combating money laundering issues. It's not always to do with the financial sector. Other sector players like the accountant, the lawyers, you also appreciate AMS, CFT issues and see how best they can help Ghana to do well as we prepare for the third round of mutual evaluation next year.
All right, thank you very much, Seth Nanamoako, Head of Analysis, Financial Intelligence Center. Next to him was Daniel Noah, Acting Director, Revenue Policy Division, Ministry of Finance, as well as Maxwell Courier, a Policy Analyst at the Global Financial Integrity. This has been another episode of the OXFAM Tax Dialogues here on 97.3 CTFM and ChannelOne TV. I am Ni Latte. Thank you so much for listening and watching. The next time we meet, we'll be talking about gender tax. Bye-bye for now.